So at the time of recording, Bitcoin is a stone's throw away from crossing $18,000 with the stock market selling off today. And that of course puts it one good day away from crossing the $20,000 threshold, which has been the psychological barrier for many Bitcoin investors and traders for several years now, as that was the high watermark back in 2018 and has unofficially been seen as the gatekeeper of the next great Bitcoin bull run, as well as the crypto market truly taking off. And needless to say, it's a very exciting time, but I think it's also a time for reflection and planning. Because if you went through the 2017 bull run, it's likely that you held on to bags longer than you should have and made choices that you later regretted down the road. So to try and prevent that, and to try to set ourselves up for the best possible future, let's talk seriously and in earnest about retiring early with Bitcoin. Welcome to Ready Set Crypto. This is your brain on blockchain. So let's begin with a hypothetical model that you might be familiar with. 10 years ago, if you put that $4 for Starbucks into Bitcoin instead, well, you'd be sitting on a whopping $700,000 today. And that's insane, right? Needless to say, Bitcoin's returns are orders of magnitudes above equities, real estate, bonds, and many other traditional investments. And sure, with the hindsight of 10 years, we can speculate anything, but in the midst of absolute chaos, Bitcoin is still proven to be the best investment this year. And yeah, sure, there was massive volatility involved. A yearly low in the 3,000s up to the yearly high of nearly 18,000 today. Well, that's not for the faint of heart. But it's also not the point. What is the point is that Bitcoin is here to stay. With its long-term prices increasing in a somewhat mathematically predictable way due to its limited supply, I think everyone should incorporate Bitcoin into their portfolio. And to that end, let's talk about 3 really good reasons why Bitcoin will explode in 2021 and why someday soon, $20,000 for a Bitcoin may be considered cheap. So when it comes to Bitcoin, I think a combination of mathematical, economic, and evolving consumer behavioral reasons ensure a stellar year for Bitcoin in 2021 and beyond. Now let's start with the first one that I'm sure is the most exciting, the math. And without getting into really heavy stuff, we do have to remember that this year we encountered the Bitcoin halving. And this was significant for a number of reasons. Like gold, Bitcoin is scarce. There's a finite amount of it. And this scarcity pushes the price of Bitcoin to rise as there's less of it to go around. Of course, every 4 years we see the Bitcoin halving event, and historically after each halving event, we've seen a bull run that has skyrocketed prices over the course of a year. And since completing the 3rd halving in May, we've just begun the latest post-halving bull run, which is projected to last until next year of this time. But honestly, anything can happen. This is crypto after all. But many analysts suggest that prices should at least hit $100,000, with a lower bound of $70,000 and prices as high as $300,000 per BTC. And as we talked about in yesterday's video, economists from Yale proved that Bitcoin's price has a self-reinforcing effect. The more that Bitcoin's price rises, the more that Bitcoin gets talked about, the more that people get interested into Bitcoin, and the more that Bitcoin's price rises as a result. And the confluence of factors, at least relating to the Bitcoin halving, well, it's pretty mathematically sound. But of course, this is just looking inward into the Bitcoin and crypto space. If we're to look outward at the second major reason we're considering, that being the economic reasons, well, we start to see Bitcoin as an inflation hedge in the face of the pandemic. As the pandemic ravages world economies, reserve banks around the globe continue to pump extra cash into their markets in hopes of propping them up. But this causes investors to park their money into scarce assets to hedge against inflation and general government shenanigans. And traditionally, that safe haven has been gold. But the problem with gold is that it's not really a good long-term investment because it really didn't do a whole lot after things settled down following the 2008 global financial crisis. Oh sure, it's a store of value, but that's really all it is. And that's why Bitcoin is so much more interesting. Not only does Bitcoin store value in the general sense, but over time it appreciates value. Bitcoin's utility increases, it gets better. Gold is gold, but Bitcoin will continue to evolve, continue to proliferate blockchain adoption, and continue to be a hedge against governments and economies around the world who increasingly want to put up borders when the world is going increasingly digital. Hence, Bitcoin is known as digital gold. I think a nice weather vane to summate this point is that, according to JP Morgan, older investors tend to go for gold, whereas younger and fintech-savvy investors tend to go for Bitcoin. I think that's a great segue into the final reason why Bitcoin is going to explode in 2021, why we should be considering it for retirement. What's important to know is that Bitcoin is going mainstream in more ways than one. Being an inflation hedge or having scarcity can't alone account for Bitcoin's rise. If that were the case, gold would also be skyrocketing right now. I think the third major reason why Bitcoin is blowing up right now is because of widespread adoption. And people are transacting with it. Cryptocurrencies are increasingly becoming mainstream. As we also discussed in yesterday's video, there are many different narratives surrounding Bitcoin right now, and one of the most salient among them is that Bitcoin is money, not just another technology. And therefore, its rise in value is almost inevitable. But retail adoption isn't the only factor to consider here. We're seeing mainstream institutional adoption as well. Take MicroStrategy, a NASDAQ-listed company, which recently made Bitcoin its primary treasury reserve asset after stockpiling $400 million worth of BTC. As Michael Saylor, CEO of MicroStrategy, said, "We find the global acceptance, brand recognition, ecosystem vitality, network dominance, architectural resilience, technical utility, and community ethos of Bitcoin to be persuasive evidence of its superiority as an asset class for those seeking long-term store value." A former Goldman Sachs hedge fund manager predicts that some of the world's biggest companies, such as Apple and Microsoft, are gearing up to add Bitcoin to their balance sheets. Of course, any of these companies parking just a tiny portion of their excess cash into BTC would cause prices to skyrocket. But they're not the only ones. You see, Wall Street is also getting on board, with companies like Fidelity Investments, one of the largest fund managers in the world, recently launching an ETF for qualified investors and suggesting that qualified investors hold 5% of their portfolio in BTC. Currently, run-of-the-mill retail investors won't be able to buy this ETF, but that should change in time, especially as we're seeing a transition at the SEC, with Jay Clayton looking to step down early next year. And so finally, we have mainstream consumer adoption coming in the form of better on-ramps and better support by the systems and services people are already familiar with. And take PayPal, for example, which announced in October that it will allow its 346 million users to buy and spend Bitcoin and a handful of other major cryptocurrencies. Essentially, every major bank is having a meeting about how to support Bitcoin because it's no longer optional. And hopefully you understand what this means. Where 2017 was very confusing for those trying to get into crypto for the first time, well, now the accessibility is really there. There are less barriers to entry and even more reasons to be in Bitcoin than there were even just a year ago. And so, needless to say, 2021 may just be the year it becomes solidly locked into the larger public's conscience. Not as some fringe investment, but as a mainstream staple of how to bet against uncertainty, how to hedge against race to the bottom monetary and fiscal policy, and quite frankly, how to have a better plan for retirement when all of the traditional outlets no longer look as certain. So, what do you think? Where do you think Bitcoin is going? How high do you think this Bitcoin bull run is going to go? Where are you looking to take profits? And how much BTC do you think you'll need to retire on? And let's discuss in the comments below. But before you go, I want to challenge you to consider joining our 10x tribe, which is free to join because it's a community hub of traders looking to gain edge, find opportunities, and make some killer profits in 2021. You'll have free access to some of our portfolios, guides, courses, and live discussion rooms where traders talk about the market, what they're seeing, and what they're getting into. So don't pass this opportunity by. Take your trading to 10x and beyond in 2021 and see what happens. We'll also be sharing our brand new portal, Reset Vision, which is dedicated to on-chain analysis and is designed to help you look at markets in a way that no one else is looking at right now. So I'm really excited to bring this to you very soon. So stay tuned. And as always, thank you so much for watching. I'll see you in the next one. Cheers.